Tesla Inc. is currently trading at $194.01 a share. It is down 6.5% today, and this is off news actually that they've rolled out record numbers of new cars in the first quarter. Musk's decision to cut prices by 9% appears to have yielded results in increased sales, but as I've said, the market hasn't reacted too favorably to that. What we're going to be doing today is looking at my automated stock valuation spreadsheet. Check out my links in the description for my Patreon. Where we'll be looking at the latest financials of Tesla and looking at my discounted free cash flow model, the Ben Graham formula, and the comparable companies model to see if Tesla is a buy or a sell. So let's just have a look at this. This is the largest American companies by market cap, and Tesla is currently sitting at 7th with $613 billion, bigger than Facebook, slightly smaller than Berkshire Hathaway. So why is this interesting? Well, if we look at the stock price currently, as I said, it's $194 a share. If we go to the year to date, it looks like Tesla's been having a fantastic 2023, up almost 80%. But if we take this out to the year, they're actually down 50%. And we'll go a little bit further here. Their all-time highs was at $407, and it is down 52% since then. Obviously, over the last 5 years, the stock is still up almost 900%, so it would have been a good investment pretty much at any point, apart from at the back end of 21. So can the stock get up to those previous prices? That is the question hopefully we're going to be answering today. Just also on the largest automakers by market cap, Tesla is sitting, not surprisingly, at number 1 with $612 billion, Toyota next with just shy of 200, Porsche 100, and you can see basically Tesla is the biggest by quite a large region. Basically the entire top 10, you compare them to Ford, General Motors and everyone else, they barely touch Tesla's entire market cap, and this is with them having a 50% decrease. So let's have a look at my automated stock valuation spreadsheet, and we will just type in the ticker, Tesla, TSLA, and this will load up everything, the financials and all the metrics here. Obviously, they are down 6%, 600 billion market cap, P ratio very high of 53.6, earnings per share $3.62, beta of 2.07. This is one of the highest ones I've actually seen, and obviously because this stock is very, very volatile, you can't have those 800% increases without those 50% decreases. They do not pay dividends, so I'll be skipping that quickly. And firstly, we're looking at the revenue. Revenue for Tesla is been growing dramatically over the last few years, 21, 24, 31, 53, and 81 billion. Their slowest year was 14%. This has been absolutely staggering growth for the company, and we'll need to make sure to take that into account when we're looking at the discounted free cash flow, because this is crazy growth. People would say the company would really be slowing down their growth because of the size they're getting in terms of revenue, but you can see they are still growing very, very dramatically. Next, we're looking at net income. Are they profitable? Obviously, they were not profitable back in 18-19, barely profitable in 2020. That was a good year for them, and now they have 12.6 billion in profit. So that is excellent to see. Next, we have shares outstanding. We're not really going to be looking at this here because the API that I'm using to get this data doesn't take all this, the stock splits into account. I can't imagine Tesla are buying back the shares, but we'll just skip this right now. And then finally, we want to see free cash flow. Is the free cash flow increasing? And yes, once again, similar numbers here. Went from negative to positive and then doubled. Another billion positive and then doubled again. So free cash flow has been generating massively, as you can see. So now we'll have a look at the discounted free cash flow model, and what this does is it calculates the future free cash flows to today's value. And well, you can see here the stock doesn't like the stock at $9.11. So what we'll do is we'll have a look at the numbers and see what we need to do to get a similar amount. So let's have a look at what analysts are expecting in terms of revenue for the coming years. So you can see they're expecting around about 102 in this year and 130 in the next. So we'll change the numbers to be a little bit more relevant of that. Let's say they continue with that 33% growth, and this is the future numbers. So now it puts it to shockingly a $12 stock, a little bit more. In terms of free cash flow, net income margins, despite the fact it's an automaker, obviously there is still a lot of tech back end. So we'll take this up. We'll say we can get this to 15%. That's a $47 stock. And then finally, the net income to free cash flow. Even if we bring this up a lot higher, say to 100%, this would still be a $61 stock. So this is obviously discounted free cash flow based on that. It doesn't really like the stock. Now, if Tesla were able to grow, say at their previous levels, 44%, 41%, this still puts them to $70 stock. So I don't think discounted free cash flow is ever going to like Tesla. But we also look at the Ben Graham formula. This looks at earnings per share, PE growth of a non-growth company, the AAA bond average, and then the current AAA bond. So we'll have a look and see if the number has changed. It was 4.56%. And yes, it has actually, so 4.6. So this will obviously eat away at the prices, because obviously if we're investing back here when it was 2%, it's now 4.6. Let me update the sheet right now, 4.6. And we'll have a look at what analysts are expecting for Tesla. Over the next 5 years, they're expecting 12% growth. Over the past 5 years, they had 86% growth. That's crazy. And 40% over the next year. So we'll put all of those numbers in just to see what it would be. But obviously the 12% is the most important one. And that would put it at a $70 stock. And for the Tesla to be a $70 stock, we would have to pretty much go back in 2020 for that kind of price. As we said there, let's have a look. If they were able to do the 40% that they're being estimated in the next year, that would put them at $172 stock, which is pretty close to where they're at. And if they were able to do the next 5 years at 85% growth, which I highly doubt it, they will be a $377 stock. But obviously that is still lower than their all-time high. So if they were able to do the growth, they could get to those previous numbers. But we'll bring it down to, we'll meet in the middle. We'll go 20. And finally, we'll look at the comparable companies models. This looks at these metrics here: EV to revenue, EV to EBITDA, PE, and will give us averages based on similar companies. So what I'm going to do is I was going to look at a company like NIO. That is an electric EV company, but you can see the ratios here are terrible. So we're going to compare them strictly to some companies in the space that I said before, which is obviously the automaker space. So we'll look at Toyota. Let me go back to that. Go back to my sheet. We'll do Ford and TM, Toyota Motor Co. But even then, you can see that the equity value of Tesla is considerably higher than any of these companies. We want lower numbers as the better. We'll look at actually, so you can see that in terms of revenue, it's the highest, EV to EBITDA, it's the highest, and PE ratio, it's the highest as well, which is why the comparable companies do not like this stock. So all three of the models really do not like the stock, apart from Ben Graham's model, if Tesla can continue at their sort of, what would it be, 50% growth over the next 5 years. But discounted free cash flow doesn't like the stock. It is very low here. For them to sort of be valued at in terms of discounted free cash flow, let me just increase this number up massively here. Even if they had 50 billion growing free cash flow in the next few years, according to this, it would still be overvalued. But consistently, Tesla has been marked as overvalued pretty much its entire life, and the only time it's been corrected is basically on this little downswing here. So, a lot of people swear by the stock. Right, guys, thanks for watching. Please give a like if you enjoyed the video. Check out my Patreon for my sheet, and I'll catch you guys next time.